today we are going to be revealing, can't believe we're actually doing this, revealing our number one trading strategy for all of you out there. The reality is, just because you know the components of a strategy doesn't mean you know how to trade it successfully. So I'm actually very happy to share our secret sauce, our secret formula for this successful strategy. We call strategies money-making machines because they repeat. What we're doing at STARTrading is not just giving you components of strategies and saying, right, go and do it. We're teaching you how to adapt and evolve those strategies over time, because that is what's going to keep people successfully trading for the rest of their lives versus just buying a strategy off the shelf. Hello and welcome to the STARTrading podcast with me, Lewis.
And me, Sophie.
And today we are going to be revealing, can't believe we're actually doing this, revealing our number one trading strategy for all of you out there.
Very exciting. So how are you?
I'm very well, thank you. I'm very excited today, actually.
Yeah, why are you excited?
Not because we're exposing our deepest, darkest secrets, well, our number one trading strategy, but because we also have the STARTrading social tonight.
We do, yeah. I haven't been to one yet.
You'll
what
come
can
to
I
this
expect?
one. Well, I hope you are, because you're here. Well, we're going to Flight Club, not Fight Club.
I read it as Fight Club.
Yeah, so no one's getting punched.
Okay.
Well, we'll see what the night brings us, right? So Flight Club, so it's like a crazy golf but for darts. Yeah, it's a good way to think about it.
Okay.
So yeah, it's gonna be really fun.
Yeah.
Lots of trading chat, I'm sure.
Yeah.
Lots of live chat.
Yeah.
And just a good old time.
Yeah, I'm very excited to see everyone.
Yeah, it should be good. And I've been looking after my dog. Well, not my dog, my parents' dog.
Yes.
So I've got my proper dopamine hit from dog time.
What dog have they got?
A little sausage dog, little wiener.
Oh,
Yeah. He's a cute one.
Sweet,
Called
they?
Otto.
Otto. Can he come to the social tonight?
Full name, Otto von Bismarck.
Why?
My dad loves engineering. So Otto von Bismarck was a bit... Wait, was he an engineer or was he a war general? I hope he wasn't a war general. Let's scratch that. Anyway, how's your week been?
Good. I had a speaking gig this week.
Amazing.
So I go to some property networking meetings and tell them about the time I bought a beach.
Yeah.
Which everyone's very surprised to hear. I start talking about moving to Indonesia and buying a beach and building a resort and dealing with wildfires and earthquakes and tsunamis. Yeah. And I'm talking and I'm trying to be really engaging. People, they always, everyone I've done, they just look at me like puzzled, like a puzzled look. But then at the end, they're like, oh, that was really interesting. Yeah. So, yeah.
Yeah, well, because you did the talk at the launch year event for STARTrading, you shared that. And that's actually how we met, because you were talking about that on a podcast years ago. Yeah. So, yeah, brilliant stuff.
And we've circled back now to our very own podcast.
Yeah, full circle.
Yes. So why do you want to tell everyone about this strategy?
Well, to be honest, I don't. Because it's our intellectual property in a way. But the reality is, just because you know the components of a strategy doesn't mean you know how to trade it successfully. So I'm actually very happy to share our secret sauce, our secret formula for this successful strategy. Yeah. So we call this strategy the pullback strategy because it's based upon a trending market. So if anybody doesn't know what a trending market is, it's where the market is moving in a very particular way. And what that particular way is it's creating higher highs and higher lows. So imagine like a mountain range, and you've got your peak. It pulls down a little bit, but not all the way to the bottom. Then it goes higher, makes another peak, pulls all the way down again, but not all the way down, rather, makes another peak, but a lower peak. So when you start to see that pattern in the market, that's a trend. And then when we have that trend, we can trade what's called a pullback strategy as it pulls back to what's called a form of support and resistance. So if anybody wants to know what all these terms mean, then the best place, mind blown already. I'm trying to do a very good job of explaining it when people can't see it as well. So but you can join us on Forex in 5 and you'll have all of that explained.
Forex in 5 is amazing. So when we're looking at a chart, we're seeing a series of candles, right, which represent the day's movement of the market. Yes. And what you're talking about is the shape that they make as they're rising and falling. Yeah. And you're almost drawing a line, like an average line of where the market is going. And when you talk about higher highs and higher lows, that really confused me at first. But it's basically a zigzag, isn't it?
Basically a zigzag in an upward direction.
Yes, or a downward direction.
Or a downward direction, yeah.
Okay, so we're looking at a chart and we've identified, let's say, a zigzag going down. Yeah. So there's a lower high and a lower low.
That's if you're going down, yes. Yeah. So the downward movement, we're looking for those lower lows, those troughs, and lower highs. And then on the upward movement, it's higher highs and higher lows.
Okay. So if we're going down, it's going down, then up again, then down, then up again.
Yeah.
And we would expect it to go down.
Yeah.
Okay.
Yeah. I think the best way to think about it is the down and up again. That up again doesn't come up to the original point. So it can't come as high up. And so we want to see that repeated up, down, at least a couple of times to really confirm that type of movement in the market, to confirm that trend.
Yeah, and I remember you saying really early actually that trading is basically pattern recognition. Yeah. And you literally start with, okay, if I see AAB, what's the next pattern going to be?
Yeah.
And that just translates into all of it, doesn't it? Because it's like, okay, if you see this pattern happening, we're hoping that it will continue to happen.
Exactly. It is a case of what have we seen the market do before, and when it last did this, what did it do next? So we want to make sure that we're really clear on our pattern, what we're looking for, the exact pattern. What were the conditions when that pattern happened? Do we have those same conditions? Because when we know those conditions, we can put those into our strategy components, and then we can trade that again. And that's why we call strategies money-making machines, because they repeat. And so that's what we're looking for, those patterns.
And how do you know they repeat?
Well, we've tested them. So I've been trading now for over 10 years, and all of our strategies we test for at least 20 years. At least 3 years. Some of them have been tested for up to 20 years. So we know that they repeat, but they do change over time. So for example, and I'm going to give a bit more context here for the pullback strategy, so get your notepads ready. You want to have a trending market. I'm going to just talk about up for now, because for the downward trends, you just flip everything I'm about to say to the opposite. So for an upward trend, when the trade pulls back, you want it to hit something called the 8 moving average. When it hits the 8 moving average, then you want it to create what's called a reversal candle, which says, right, it's pulled down into the 8 moving average, but the candle tells me it's going to want to move up from this point. So when we get that, we know that we can then trade the market up. We would have our entry point above that reversal candle, so it's got a little bit of room to breathe. We'd have our stop below that reversal candle, and we'd have our target at least a 1-for-1 profit, meaning whatever we've got at risk on the trade, we want to make back at least that amount of profit as well. Now, a couple of other things we want to look at. I can't believe I'm giving all the details away here. Never done this before. So a couple of other things we want to look at the point you get that reversal candle. Do you have the moving average convergence divergence, the MACD, which is an indicator giving you upward bias, upward movement on not the daily chart, the weekly chart? So the pattern, the trend is on the daily, but the supporting evidence of the MACD, we're looking at the weekly. And then we put our entry in a logical place within support and resistance, like I said, giving at least that 1-for-1 risk reward.
Amazing.
Yeah.
I think we need to break it down even more, Lewis.
Oh my goodness. Okay, how do I do that?
For the newbies. All right, so they've got their upward trend, right?
Yeah.
And it then has to zigzag back down to the 8 moving average.
Yeah.
What is the 8 moving average? What does it look like?
So the 8 moving average is a wiggly squiggly line that you don't have to plot yourself. The broker does that automatically. So the 8 moving average is is what it says on the tin. So it's a moving average of 8 time periods. So if you're on the daily chart, those 8 time periods represent 8 days worth of data. So it's the average, generally the close price of each of those 8 candles, the average price of those close prices plotted on your chart, and then they're joined up as a line so you can see where that 8 moving average is moving. So for example, if you were looking at the 21 moving average, it would be 21 days worth of data that would then be plotted as an average. If you were on the weekly chart, that 8 moving average would look different, because it's taking 8 candles, but those 8 candles are now worth, 1 week, 1 candle. So it's 8 weeks worth of data as opposed to 8 days. So that's what your moving average is.
And these are all indicators, right? Which within the software we use, we can just add, and there's a list of how many? Thousands.
Hundreds
and thousands. So it's about knowing which ones to select, and then using those to help our trading, right?
And this is exactly why learning to trade for yourself, like self-teaching, becomes an absolute minefield, an absolute nightmare. Because you don't know what you don't know. You don't know which ones are good. You don't know how to use them. You don't know how to use them in conjunction with other tools as well, which give you that safe trading and that profitable trading as well. Whereas what we've done is we've taken our years of knowledge and expertise and testing and trialing and hours and hours and hours worth of doing that so that you don't have to, which is why we can give a very clear structure and a very clear process.
Amazing. So we're looking for the wiggly line, the 8 moving average.
Yeah.
If our zigzag has hit that, that's a good sign.
Yeah.
And then you talked about the MACD as well, which
Yes.
sounds very technical and confusing, but it's another indicator, right? And what does that look like?
So the moving average convergence divergence, MACD, I mean, MACD is so much simpler to say, right? So again, it is what it says on the tin, but it's a calculation that's done for you. The way it looks is very simple, thank God, because I'm a simple person. I like simple. So the way it's presented is just as bars underneath the chart. So you've got your main chart at the top, and then you've got this pattern underneath, and you're reading that pattern. So it's just different bars, red and green, moving upwards or moving downwards. So when you're looking at the weekly, if you're trading up on the daily, you also want the weekly to be moving up. If you're trading down, so you're shorting the market, you want that weekly to be showing downward bias as well. But what it actually is moving average convergence moving together, divergence moving apart. So it's just telling you, are the moving averages in the market moving closer together or further apart, and that gives you an indication of how much momentum there is in the particular direction you're looking to trade.
Interesting. So we're not just looking at the trend, we're ticking off, is it tracking the 8 moving average, and is the MACD showing that bias as well?
Yeah. So really a lot of what we do in our trading when it comes to chart mastery, the first point of the STARTrading method, is we want to understand, what is the market bias? What is the market direction? Where is it most likely going to go next? So these tools we're using help us identify that in a really simple way. If this is the first time you've heard it, probably doesn't sound that simple, but it's very, very visual. This is a visual art. So everything we're talking about here is visual. And that's why we spend a lot of time on Forex and 5 and on our mentorships with people looking at their charts and applying this knowledge and getting that feedback from us to make sure they're seeing it correctly.
Yeah. Amazing. Okay, so we've got a trend, we've hit the 8, we've got the MACD agreeing, and then it's about the candle, the confirmation candle.
Yeah.
And that just has to agree, like that has to be the right colour and shape. So if your trend is going upwards, you don't want a big red candle because that would be pointing in the wrong direction. Yeah. So you'd like a big red, a big green candle, or one with upward bias, right?
Yeah.
Okay.
So in one sense, the color doesn't matter. Generally, a green candle is giving you upward bias, but not always. Generally, a red candle is giving you downward bias, but not always. So what you're just looking for is at the point it hits the moving average. So if we're trading up, it's come down into that 8 moving average. So we want a candle around that point to now say, right, I've been moving down, that's why I've hit the 8, but now I want to move back up again. So that's what we're looking for, a candle which says, right, I'm ready to move back up again. On the flip side, if you're trading short, so you've got that downward moving trend, it's going to have to pull up into the 8 moving average. So when it's pulled up, you now are looking for a candle at that point which says, right, I'm ready to move down again. So that's what we're looking for.
Amazing. And then you were talking about placing the trade.
Yeah.
Your the different levels. So what are the 3 levels that we're putting in there as information to place the trade?
So we call this the set method, SET, stop, entry, target. So you want to put your entry, if you're trading up, above that reversal candle, that confirmation candle, and you can call it reversal or confirmation. So you're looking for that. Your entry to be above that candle.
And entry means when the market actually goes up there, you're now live in the trade.
You're live, yeah.
Okay.
Yeah. So you've got your skin in the game, you've been entered into the market, your trade is now live. Your stop would be below that reversal candle, because you want to give it some space to breathe. And you're saying, right, if the market does go below that point, then take me out. And then your target would be at least 1 for 1. So whatever say your distance between your entry and your stop is 50 points, your target would have to be at least 50 points above that. And then ideally we want more, but that's going to be dictated by the support and resistance levels in the market.
Yeah. So we've talked a bit about them before. Do you want to go over support and resistance?
Yes. So support and resistance are basically ceilings and floors in the market. So they are where price has been before and we get a response. So if price is responding, say at 100 points above where your entry is, you aren't going to want to trade to 120 points because then you're pushing beyond that ceiling. You may want to trade to 80 points. So you've got a nice little buffer. You're not pushing the envelope too far. You're not being too greedy, but you can still get a nice amount of profit from your trade.
Mm-hmm. And how can you find those levels?
So you would look probably at the weekly initially, and you can also look at the daily. So just again, visual art. So when you look at your chart, where do you see multiple tests at a similar price level? So it doesn't have to be exact, but similar price area, probably within about 5 to 10, 15 points, depending on the size of the market. Where do you see spikes up, hit, move away, and then later on in the chart, it spikes up again, hits and moves away, and similarly on the downside.
Amazing. So that's how we place our pullback trades.
Yes, it is indeed.
And how much practice do you think someone needs to do on this before they can start actually live trading?
Very good question. And I'm going to throw that at you.
Oh.
How long did it take you?
I mean, the time is all warped now. But the way you guys teach it, you start immediately. Like as soon as you discover STARTrading, you're told to go on a chart and start having a look at levels.
Yeah.
So you're starting to learn automatically. And then it's just find a trend. See if you can find a trend. See if you can go back in the markets. And you just have the first bit of information. Can you get that zigzag pattern somewhere?
Yeah.
So because there's 5 or 6 criteria, right? You're not overloading us to start with. So it's find that trend and submit it to a mentor. And then come back again and start, getting into the course, getting into the learning and start adding things onto that and then start testing it, back testing it. So I think it took probably 3 months from start to live trading that strategy. The first month was learning. The second month was, start looking. And the third month was submitting loads of back testing, and it was group testing every week. Do maybe 8 or 10 example trades from the backtesting every week with feedback from Josh, who would then say, good trade, bad trade, good trade, bad trade, try this, tweak this, and you're getting better each time.
Yeah, it is that little step by step. So I think if people have never traded before and they've just heard me break down that strategy, they're probably like, oh my goodness, I don't understand any of that. There's no way you should be expected to understand any of that when you first hear it. And again, it's a visual thing. So just listening is a hard way to learn it, which again is why on Forex in 5 and on our mentorships, we make sure we have you practice it in that setting and give you feedback. But everyone is different. So some people pick it up super quick. Some people take a little bit longer. Our job as mentors is to help you at whatever pace you're at. And what I would say is people who tend to take a bit longer or find it harder, it's because they're doing exactly what you just said there. They're trying to master all the components in one go rather than just one thing. I mean, there's a lesson for life in there, I think.
Yeah.
But if they just mastered that one thing, so we always focus, nail the trends, identify the trends, get good quality trends, then we'll move on to the next bit, then we'll move on to the next bit.
Yeah.
And things like the MACD are actually super simple because it's just, is it moving up?
Yeah.
Is it moving down? Although it sounds what it is quite complicated, visually it's very, very simple.
It's a bar chart.
Yeah, it's a bar chart at the end of the day. Yeah.
Yeah. And actually, for all 3 strategies that I've learnt, I thought I was ready before Josh did.
Yeah.
So I'd be like, okay, I've submitted 30. I'm seeing Josh on the group coaching today. I think I've nailed it.
Yeah.
And he's like, yeah, this is looking good. Very enthusiastic. He's like, just do 1 more week for me. Just look at a few more markets.
Yeah.
And I think you'll be ready next week.
Yeah.
And I'm really driven. I'm really impatient. I was like, okay, yes, Josh, you're right. Yeah,
and
sure.
cursing him.
Yeah. But then the next week, I'm like, actually, you were right.
Yeah.
You were completely right. I needed another week.
Yeah.
So
And it solidifies the learning, and that's the really important thing. It's like there's a reason why when you learn to drive a car, technically you can drive the car, but are you really going to be safe on the road? There's a different level of kind of mastery and competency that you kind of have to really be safe and understand what you're doing, which is why we tend to push people a little bit longer rather than super quick.
Yeah.
Because although it would sound great, I was trading live in 2 weeks, is that really the best thing for our students? Probably not.
No.
Probably not. But one thing I will say as well about these strategies, like we say, we test them. So when we originally were teaching pullbacks, we didn't trade off of the 8 moving average. We actually traded off the 21 moving average. And we just noticed over time, again through testing, through our live trading, that the 21 moving average pullbacks weren't working as effectively as they used to. So we changed it up. We looked at what else we could do. We tested a new strategy, and we found that when we traded off of the 8, we had a higher trade frequency, which meant we had more profitable trades, which when I first started 10 years ago wasn't the case. So that's because market conditions change. And I think one thing which is really super important is that what we're doing at STARTrading is not just giving you components of strategies and saying, right, go and do it. We're teaching you how to adapt and evolve those strategies over time, because that is what's going to keep people successfully trading for the rest of their lives versus just buying a strategy off the shelf. So if someone was to take the strategy we just talked about now and trade it, brilliant, you'll have success if you learn how to master it correctly, because that's also a different component if you master it correctly. But in the next few years, will that continue to work in the way that it is? I don't know. What I do know is that we will, in STARTrading, be knowing what is working, knowing what isn't working, and our students will be totally safe, and we'll teach them the new way.
Yeah, it's really interesting to hear you say that, because people could go and trade this strategy now. But I remember in some of our group coaching sessions, a lot of it is subjective and up to the trader. Like, people would ask Josh, well, is this candle, the correct, just the correct weighting?
Yeah.
And what should my risk reward be if the level of support is down there? Should I go all the way to it, or should I just go up to here? And he was saying, well, what does everyone else think? And everyone else had a different opinion of where to put that. And to go through the group coaching process and to hear different perspectives and tweak it each time is really good.
Yeah, it's very, very helpful. And that's why we cap our small groups to 4 people on mentorships, but also why we have small group mentorship, because people ask questions that you don't think of. It's a really good way. It's a more rounded learning experience. So we love it for that reason.
Yeah, and people were submitting trends that I wouldn't have submitted, or or the other way around.
Yeah.
And you can, that's a trend as well, actually, maybe if I used it that way.
Yeah.
So it's great.
Yeah. We've recently done a massive piece of work, and that sounds like a negative thing, doesn't it? You're right, old piece of work. But no, we've done a massive piece of research. There we go. Basically going into our data and looking at our data and looking at how our strategies perform. And we're actually going to be releasing that in a masterclass, an online reveal, in the next couple of weeks, actually. So yeah, definitely some point in March we'll be releasing it. So I can give you a little sneak peek into the pullback though.
Yes, please.
So from our data, so we know that there's no such thing as a 100% winning strategy. With our strategies, because of the way we manage our risk and we stay safe and we maximize our profit potential, even if you're only winning 60% of the time, well, even if you're only winning 55% of the time, you're still in a profitable place. But we found with the pullback strategy, the way that we've adapted it to where it is now, you're looking at about an 80% win percentage, which is actually crazy. It's really, really good. And a lot of our students are making 5% per month just off of pullbacks as well, which is phenomenal. Absolutely phenomenal. Now, when you add in our other strategies, the results get even better, but you'll have to come to the session for that.
Yeah. So you've always traded pullbacks?
Always, yeah. It's the first one I learned.
You're a fan.
Yeah, I'm a big fan. Yeah. But like I said, when I started 10 years ago, I was trading off the 21, but it's gradually evolved. And you can still trade off the 21, you just don't get as much trading opportunity when you do that.
So do you do a bit of both now?
Yes, yeah.
Amazing. Anything else you want to add about beautiful pullbacks?
Is there anything else I want to add? Yeah, just why we teach it first, actually. So the reason why, it's our number one strategy, and the reason why we teach it first to our students is there is something about the pullback strategy, and I think it's because of the different components that it has, that once you've mastered this one, it will take you maybe a couple of months to master this one, but then when you learn our other strategies, it's so much quicker because you've already done the groundwork of understanding markets, how they move, why they move the way they move, and what strategy components are. So when we get to the next strategies, it's so much quicker to learn them. It doesn't take anywhere near as long as when you're learning the pullback. So that's part of the reason why we teach it first. It's like a magic strategy that just prepares you for everything else.
Yeah, I definitely found that. I think the learning curve is very steep to start with, but when you've got your first little medal and you can do pullbacks, the next one seems really straightforward, but it's because you've built all that knowledge up first.
Exactly.
So yeah, that's brilliant. Amazing. Well, I had a good week last week.
Yeah.
Obviously, we're still celebrating that whatever happened last week in the JPY market. And I'm just trying to keep consistent with daily trading.
Yeah.
So some of those trades are still in. finding a few new ones, but just getting into the flow of it.
Yeah.
I'm finding it quite mindful, because
Okay.
it's like, busy day, kids' bedtime, have dinner, relax, and then, it gets to 9:30, 10 o'clock, just sit down, like there's no one near me.
Yeah.
It's quiet, and you
Yeah.
can just zone in and focus and go through the markets.
I totally get that. It's just you and the market.
Yeah.
And distractions have to be cut out, and they just are. So you do become laser focused, and especially because you know exactly what you're looking for, it kind of is that it focuses the brain. So yeah, I can totally get why it's meditative.
Yeah. Shout out to all my 10 p.m. traders.
Yes. Yeah.
Who do you think is more common, morning or evening?
Morning, I think.
Do you
Yeah.
think so?
Yeah. I would probably say 75-25.
Really?
Yeah.
Well, maybe I'll start a little club.
Little club. Yeah. We'll have a little section on the Discord for the late hours.
Yeah.
Yeah, we can do that.
Sounds good. Tell me if you'd like to join the club. Do you want a snack?
Oh, yes, please.
Yeah?
Yeah.
Okay.
What have we got this week? I'm going to get mine ready as well.
Okay. You're going to love this. Are you ready?
Yeah.
Okay, close your eyes. Okay, open your eyes.
Yes!
A surprise!
After all of our chat this morning about olives being amazing.
We had some olive chat this morning. What can you see, Lewis?
Oh, yeah, sorry. I always forget, not everyone can see. Greek halkidiki and Kalamata olives with feta, and they're pitted. So we've got green olives, we've got red olives, would you say? They're not black, are they? People know what I mean.
I don't know. Yeah.
I feel like it's going to be very oily.
Could be. I'm really glad you like them, because some people hate olives.
Love olives. I will just say, this is not just any olive. This is an M&S olive.
Well, this is the standard I've set now for myself.
Actually, that's very true, yeah. I have not set a similar standard. Right.
But I think as we continue the podcast, when we get into our 100th episode, I'm going to have to go, I'm going to have to leave M&S.
Mm-hmm.
But I did message Lewis the other day saying, would you eat an insect? Because I found crickets in a bag.
I would.
Would you?
It would have been a surprise.
Have you?
I never have.
No.
I would do. I'm not sure I'd do a scorpion. No, that's fine actually. Yeah, I'm not allergic to them. As long as they're not dusted in nuts, I should be fine.
Nutty insects.
I was thinking, if someone's allergic to shellfish, would they be allergic to like a locust or a cricket or something? But yeah, it takes away the surprise if you send me a picture of it beforehand.
Yeah, well, I really wasn't going to get you that.
Would you like to try one?
Yes.
They actually are delicious.
Thinking? Are they nice?
They're amazing. I'm definitely surprised.
Hmm.
I feel like you set me up for it with the olive chat right at the beginning.
You mentioned olives.
I'm a psychic.
And you said I'll take a grape olive.
All right, so if he's straight in for another one.
Yeah.
No, they're delicious. So surprise, 10 out of 10.
Mm-hmm.
Taste, well, they are M&S. I have had better olives in my life, so I'm not going to give it a 10, but I will give it a 9.
Oh, I'm happy with that.
Yeah, very good. Right, are you ready for your snack?
I'm ready.
Right. Close your eyes.
All right.
Right, here you... This is a memory from the past for me.
Oh, it's a little Pez thingy with... Who's on it?
Thor.
Thor. Okay.
I hope it's Thor. I think it's Thor. I
Thank
was
you.
going to go for either him or Spider-Man.
Oh, that's fun. Do I get to build it and then...
I think so, yeah.
Okay.
Yeah. Try and get... It's like opening up a toothbrush, that's the word. We're in.
Oh, I haven't had this for ages.
It was either him or Spider-Man. Which one would you have preferred?
Thor's good. Okay.
I mean, I'm a fan of Thor.
Do you open the packet and put them in
I think you must do, yeah. Is it from behind? You've got to slip your Pez in his backside.
Where do they come out?
Pull it up.
They come out there?
Yeah. Put it up and turn it around. Oh, yeah, you must put it in there.
Okay, should we go...
Do you want to just
orange
try a sweet
or-
from the packet rather than try and get him in there?
Oh, is this taking valuable time from the
Not at all.
podcast?
I'm sure we can
Do
edit.
people not want to see? All right. Have an orange.
Okay, I'll have an orange.
Sorry, I got excited.
It does look a bit medicinal, doesn't it?
Mm.
Oh, they're a bit fizzy.
Mm-hmm.
I mean, top quality.
Powdery. Okay, I'm going to say that was a nice surprise because it's like a toy as well.
Yeah.
10 surprise. Taste. 6.
Yeah.
Is that fair?
I think that's generous.
Okay, fine.
Yeah, there we go.
But that was really nice and
Yeah.
fun. Thank you.
You're welcome. So, thank you very much for joining us on this episode of the STARTrading podcast. We look forward to seeing you in the next one.
Bye.